Hello and welcome to Sarat Chandra IAS Academy, where your dreams are our mission. This is Yatharth here, and this is our second lecture for economy series. In the last lecture, we solved a question around the open market operations and sterilization, external shocks. So in this lecture, we'll be talking about a different question, and we're dealing with different things. So let's see. So consider the following markets. It's talking about markets. First of all, it's very important for us to understand what does market mean in fact. All right, market is essentially dealing with exchange. Money is a medium of exchange, but it's essentially exchange between two things. Let's say A and B. So whenever we talk about the markets, we must know what the markets, the components of market A and B are. What is getting sold? Okay, what is getting bought? So this is very important when we deal with markets. All right. Okay, so let's now come back to the question. So call money market, treasury bill market or T-bill market, government bond market. This is basically bond selling and buying of bonds, treasury bills, money market, and stock market. So in stock market, basically stocks are getting sold. People are buying the stocks in exchange of money on a prospect of growth, let's say. Okay, so let's see. The question is what the question is asking, that how many of the above are included in the capital markets? Okay, so capital is different from money. Capital is different from money directly. All right. So let's see. Let's talk about the bonds first. What are the types of bonds? There are government bonds, there are corporate bonds. So bonds include T-bills, government bonds, state development loans, state government issues securities under Uday scheme, Discom, special GUI securities. So there are many type of bonds, but the corporate bonds are like perpetual, zero coupon bond, masala bond. Masala bonds are very important. The question was asked in 2022, I guess, on masala bonds. Masala bonds are issued by the private market. Whenever a private company wants to raise some capital, then it issues the masala bonds into the market, global market, let's say. This is one of the part in the internationalization of rupee also. So this all you can read. Let's now come back to the capital and money markets. So capital markets are financial markets where long-term securities such as stocks and bonds are traded. They provide a platform for raising capital for businesses and governments. So what is capital? And how it's different from money? Okay, so let's come back here. So capital is essentially money only, nothing very different. But capital is something when money is preserved. Money is preserved. It is there for a strong time. And with the time, this money brings growth. It brings growth. Okay, let's say you went to market, you have 1 lakh rupees. You purchased a watch. Okay, now this watch over time in let's say 7 years grows to a cost of 2 lakhs. Then it's your capital. Okay, and this exchange was in the money market. Now when you sell this watch in let's say 2 lakh rupees, so again where you sell, it's money market only, the same, but your capital was developed. This 1 lakh rupees extra, it becomes your capital development. So basically it's about the money conserved for a long time. So let's come about this question. So government bonds are long-term debt securities issued by government to finance their activities. So again, we are financing our activities from the money that we preserved. Okay, such as in the case of watch, let's say, we required this money invested in the watch to keep time, for a simple example, and there is a growth in capital also. The government bond market is part of the capital market as it involves the trading of long-term debt securities. So this statement is correct as bonds are long-term. So it can be included in the capital market. Statement 2 is incorrect. Why? The call money market is short-term, where funds are borrowed and lent for very short durations, usually overnight. It deals with short-term funds and its transactions are not classified as part of the capital market. So if something is happening overnight, let's say for 24 hours or 12 hours, then this money will not increase the capital of whatever venture has, let's say, take this loan. If you have let's say 1 lakh rupees for 1 day to keep, then there will be no increase in your capital overnight. All right. Let's come to the statement 3. So T-bills, again, T-bills are short term. So they are short term debt instruments issued by the governments to finance their short term cash flow requirements. The treasury bill market, similar to the call money market, deal with short term instruments and not considered part of the capital market. So it's basically all dealing with time. Okay. The statement 4 is correct. The stock market, also known as the equity market or share market, is where shares or stocks are publicly listed and are bought and sold. The stock market is part of the capital market that involves the trading of ownership interest in companies. Okay. So what did we basically talk about here? About the government bonds, stocks, T-bills, and call money market. So these two are not part. These two are part because they are long duration and have some interest in the growth of capital. Because here ownership is traded and in the bonds it's for a long term. Okay, so these two are the correct options. Let's come to the next question. So which one of the following best describes the concept of small farmer and large field, where the farmer is small and field is large? So what is the issue here? Issue is of scale. Okay, there is a problem of scale because a small farmer, let's say, can manage a small land holding but not a large land holding. So let's see. So resettlement of large number of people uprooted from their countries due to war, by giving them a large cultivable land, they cultivate collectively and share the produce. So let's see if this defines. Many marginal farmers in an area organize themselves into group and synchronize and harmonize selected agricultural operations. So this can be the answer. This is marginal farmer, a small farmer. Okay, many marginal farmer in an area together make a contract with a corporate body and surrender their land to corporate body for a fixed term, for which the corporate body makes a payment of agreed amount to the farmer. So I don't think this is a concept. This is a viable concept. If you are basically selling your land or giving it on rent, all right, then what's happening? Nothing is happening. Let's say many small farmers, they give their lands on sell for a, let's say, short term or long term for the company and take money in exchange of that. So this doesn't sit too well with the options. Let's come to the fourth one. So a company extend loans, technical knowledge and material inputs to a number of small farmers in an area so that they can produce the agricultural commodity required by the company for its manufacturing process and commercial production. So this is also not setting too well, but let's see what can be the answer. So let's come to this Indian Express news. So agricultural economics, how doubling of farmers' income is possible even with small land holdings. A unique small farmer large field model experiment in Odisha shows the way forward for achieving economics of scale and reducing cost of cultivation. Okay, so we'll see this. So the small farmers large field model is founded on the same principle of aggregation. Aggregation means to collect, to aggregate. And achieving economics of scale through strengthening backward and forward integration along the supply chain and lowering costs by synchronizing key agricultural operations from field preparations to harvest. Basically, it is economics of the scale. So what are we aggregating? The marginal farmers. The SFLF was conceptualized in Vietnam in 2011. One indicator of success is the total area under it rising from 8 hectares to 1,96,000 hectares between 2011 and 2015. Small farmer, large field model has taken various different forms in Vietnam. Some are formal, with farmers physically pooling their land and setting up companies that operate like private businesses. The shareholders here are farmers themselves. But there are also many informal SFLF entities wherein farmers have retained their individual holdings and come together only for synchronization and harmonization of selected agricultural operations. So this gives the verbatim answer. So whenever there is an economic model proposed in the newspaper, you should get a dream that it will come in the exam. Okay, take care of this. Okay, to improve efficiency and lower costs. So that is why option 1 is incorrect. This option describes the conceptualization of resettlement for people uprooted from their countries due to war, rather than the concept of small farmer, large field. It does not involve the organization of marginal farmers or the synchronization of agricultural operation. Now, when we come to the option B, it's correct. The concept of small farmer, large field refers to an idea where many marginal farmers in a particular area come together and organize themselves into groups. These groups work collectively to synchronize and harmonize selected agricultural operations. So in this approach, let's say what happens. I'll tell you a simple example that one by one, there are, let's say, 100 clothes. And one cloth takes 1 hour to dry. Then how many hours 100 clothes will take to dry? So there are two types of students here. Those who are drying them one by after one, let's say individually, they will take 100 hours. The other set of students, they collectively dry their clothes. It will still take 1 hour only. So this is the economics of scale. All right. If you were to produce one, let's say something, whatever dish, restaurant dish, you go to a restaurant and order matar paneer, you get it for around, let's say, 150 rupees. But if you were to produce one matar paneer at your home, it will certainly cost more than overall 150 rupees. It may cost you 200, 300 rupees. Because this is the economics of scale. They can sell it at this price because they are mass producing the thing. All right. So there's nothing different here, the same concept. So in this approach, instead of individually working on their small plots, these farmers pool their resources, knowledge and efforts to cultivate larger fields collectively. By doing so, they can achieve economics of scale, improving efficiency and enhance productivity. This concept allows small farmers to overcome their limitations of their small land holdings and collaborate to optimize their agricultural activities. It can involve sharing equipment, sharing labor, collectively marketing their produce, and adopting modern farming techniques. Option C is incorrect. This option describes a scenario where marginal farmers enters into a contract, surrender their land, etc., but not involve the organization of farmers and collective operation. Option D, on the other hand, is also incorrect. This option describes a scenario where a company provides loans, etc., and inputs to small farmers, but it does not involve the organization of farmer or synchronization of agricultural operations. So this is what we saw here. Small farmer. So what is confusing here, why we cannot solve the question when we see the question, is because of this plural. Here, if an extra S was there, that is small farmers, large land, then the question would become very, very easy for us to figure out that there are many small farmers and there is one large land. Okay, so even we would have been able to conceptualize that despite there being a large land, regardless of its origin, that it belongs to these farmers only. These farmers are able to do something, cultivate here. Okay, but this plural changes the question. It makes the question look like that there is one small farmer and it has very large land. Let's say one small farmer and it has very large land. So that's why it's unable to do anything. Possibly it can be profitable. Possibly it can be in loss because of the land being large and he is able to cultivate only this much. So what changes here? All right. So we need to see the question in context of the options. All the options in the question talk about various farmers. Okay. So this may click us in the mind. This may produce a click in the mind that this farmer may be a body of farmers, various farmers. Now, if there are many farmers and they have large land, then what changes? The scale. So this is about economics of scale in essentially. Okay, so this could have told us the corporate body issue. It came because of this MSP issue and the farm laws. But as farm laws were repealed, so this is not a topic anymore. All right. MSP is still a topic that we'll see in the next question. So let's see the next question here only. The government of India provides minimum support price for Niger seeds. Niger is cultivated as a kharif crop. Okay, MSP. Niger. These things very important for us to know. Kharif crop. Some tribal people. And Niger seed for cooking. So these are some things that we should know. We'll be dealing it in the next question as is a little big question. So we'll see it in the next question. We'll also take some learning. So let's deal with this in the next lecture. Thank you for this lecture. This is Yatharth here signing off. I hope you learned a lot. See you in the next video.